going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, I initially did not plan on making a video update today, but obviously considering the price action, and I also realized a lot of you did not watch my previous videos, so make sure you turn on those bell notifications and you get subscribed for these updates. But I do want to piggyback on what we were talking about because there's some people that are freaking out about the Bitcoin price because as of today, we've had Bitcoin fall below $63,000 already once. So the question is, are we looking to go a lot lower, and should we be concerned, especially considering the fact that during Trump's speech, we had this big pump into it, and it turned out to, what appeared to be a sell the news event. But remember, we had said if we pay attention to what is happening in the charts right now, there's actually something that is brewing, and this may be, a term that you hear a lot of YouTubers or influencers or whatever, I hate even being called that, throw around, but I'm actually going to say right now, guys, that this is probably most likely the last opportunity that you are going to have to accumulate Bitcoin at these levels before a massive move to new all-time highs. Now, of course, the timing of this accumulation period, it could be anywhere for, a month to 6 weeks or something of that nature, but I'm going to show you in today's video super quick why you need to be paying attention because this could be Bitcoin's last stand and it also might be that final opportunity. And if you're still in doubt and you don't care about the charts and you don't want to look at that, make sure you stick around to the end of this video because I want to play you a clip that really puts into perspective everything that is going on right now, and you'll start to understand why you probably want to start getting a lot more bullish than bearish. So without further ado, obviously today is going to be a little bit of a shorter video. YouTube doesn't like short videos, so if you guys could, share this video with a friend, drop a like, it helps to spread the video, and, obviously it helps the algorithm and all that other stuff, but nevertheless, guys, let's drop in, let's have a look. All right, so I just want to talk again about the chart super quick. For everyone who's been watching the videos, you obviously already know this, but if you didn't catch last video that I made, you could see right here that really what we've been doing is bouncing between the $61,000 and $71,000 range. You could see these two yellow lines right here. Now, of course, we have had a little bit of a fake out to the top side for the bulls. We've had somewhat larger fake outs to the downside. And yes, you could say that technically we are putting in lower lows as well as lower highs, but I will explain to you in just a minute why that's nothing to be concerned about, right? We did just have the monthly close and some people were concerned about that candle, but again, we'll get into that. So you can see what's happening is as we start approaching the highs, we put in these lower highs. Once we break it, we fall, right? Bear trap. What happens? We start moving back up again. We put in these higher lows. I meant to say higher lows back here. What happens once we break it? We don't get above the previous high. We break down again. We have a bearish fake out. What happens? Well, we start putting in that pattern again. And now we've broken that pattern. But a big difference this time is that we do have this ascending channel pattern. Now, I don't have enough data back here, but if I actually come over to this coin catch chart, you could see that this data is obviously a little bit more drawn out, as you guys can see right here. This is a much farther situation where you can see we're coming down into that area. So getting back to this chart, which we've been using, you can see we are starting to approach the top of this area, which is pretty much right where the Bitcoin price is at this moment. But if that area was not to hold, which of course there's a potential that it doesn't, we may end up coming down and putting in a potential higher low right here at around that $56,000 area, which corresponds with the heart line of this ascending channel. Now, where are we getting these numbers from? Well, I'm going to show you in just a minute, but the big concern that we did have was that we had a CME futures gap right here. I don't know if you guys could see that. Right here, there is a gap. If I zoom in, you can see there is no candle in between this area. So what does this mean? Well, it really ultimately, honestly, doesn't mean anything truthfully, but if you are following the meme of what's been happening with these CME futures gaps, they tend to get filled. In fact, I believe, somebody correct me in the comments, but they have around a 94% chance of hitting, right? There's only been like 2 in Bitcoin's entire 15 plus year history in which we have not closed one of these gaps. In order to close this gap, that area is around 58,000. And also super quick, while we're on the topic of trading, if you guys are interested, this is a limited time reward. They will not be running this again. You can get 15% cash back on your futures trades over at Blowfin if you're interested. This is for the first 200 users only, but if you have already signed up using my link, you are eligible. And if you haven't, all you have to do is sign up using the link below. You can trade. There is actually a a bonus on that as well, and you will get 15% cash back on all of your trades. So if you guys are interested, check that out below in the description. Now, for people thinking that we're going to come all the way back down to the bottom of this broadening wedge, which would bring us down to 53,000, is it possible? Of course, anything is possible, but it's not likely. And the reason why it's not likely, if I could just come over here, what chart am I looking for? Right here, is that we have had the buy signal on the hash indicators, right? The hash ribbons. And I went through this in my previous video, but every time we have these buy indicators, you can basically see it does not mean that the price is going to just skyrocket from that point. But what it does mean, and what it shows us virtually every single time, as you guys could see right here on the chart, is that we end up basically confirming that we are in a continuation pattern and we're not going to go lower than the previous low, right? So, you could just go back here, for example, obviously we had it right here. Here's the low, the next low, not as low. It's a higher low, right? But it doesn't mean that we can't go down in price. Next one right here, we had a low at around 16. The next low was 17, right? So we continued upwards, but we did have a downwards trend after getting that signal. Remember, this signal does not mean the price is going to go up immediately, but it does let you know that we are in a continuation pattern with the likelihood of this low, the next low, being higher than the previous low, right? Same thing over here, right? We had this low down here at around 15.5. We got the signal, we came up, and look at this, from top to bottom, right? Well, we had a massive 23% crash, right? So this doesn't signal that we're just going to go up forever, but it does signal that the trend is still, going to continue. The trend did still continue, and this low that we put in, this low is higher than this low right here. Excuse my crude drawings, guys. I'm just trying to make a quick point here. And you can see same thing here. We got the signal, this low, very close, but still higher than this low. So this low is at 53, which says that we could come down close to that level, possibly, but the more likelihood is that we come down to fill the CME futures gap. Could we shoot through it and have a little bit of a fake out? Of course, but you'd probably have a bigger wick like you did down here, right? And you might be asking, well, what about the 21 exponential? Well, yes, the 21 exponential does often, provide some nice support in bull markets, but it doesn't mean that you can't break down like we did here and then find support again up here. Other issue that we're having, which is bullish, is that we're looking to eventually, at some point in the next few months, have a bullish crossover on the 100 moving above the 200, right? And this is something that you can look at time and time again. And when we have this structure right here, where you have it basically in the order of, pink, blue, yellow, green, that is when you have everything going from highest to lowest, and that is when you are in the most explosive move of the the bull market, excuse me. And another thing to point out is you can see right here, people were front running the 0.382, which is 51,000. So as people are expecting these lower levels, they're getting front run. Here's another example right here. They thought we were going to go down to 21 exponential, right? And that also coincided perfectly with the 0.618. And what happened? They didn't get it. That was down at around 37, and Bitcoin only went to 38. So this doesn't say that we can't break down here, but the likelihood, due to all of what we're seeing right here, is a continuation to the upside. Here's another thing to just consider. Back here, between March of last year and October, we had 6 months of sideways and down, right? But keep in mind, we never put in a lower low than this low that we had right here. This low was slightly higher, right? Higher by, just maybe $1,000, but we never went down to that level. And then we had a continuation. Then we had from the breakout, 6 green candles. Well, 6, okay? So we still haven't, this move right here is not even as long as this move right here. I know it feels like it is, right? But it's not. And another reason why I wanted to point out that this candle right here, okay, that some people are saying is, not that bullish. Look at this tail right here, okay? That is massive, massive buy pressure. So even though, yes, it did go lower than this, keep in mind, we did not have that signal flashing, right? And for everybody, who's been asking about this, this pattern right here, well, why do we keep putting in, lower lows and lower highs? Well, this pattern is actually a broadening wedge pattern. So if you come over here and have a look at the textbook of a broadening wedge pattern, look at this. This is coming from a downtrend, okay? This is a downtrend. As you can see, look, we're putting in lower highs, we're putting in lower lows. What happens? We have a reversal. In a downtrend, the price objective is basically where you had the start of the trend. Well, we're in an uptrend, and guess what? The price objective is actually the width of the top all the way to the last move. Now, we don't actually know where that bottom is just yet. We can kind of guess, assuming that it's at, for example, this level, right? So really, if you wanted to have this breakout and follow it the way that the chart is telling us, right? You know, as we can see right here, you go from the top to the bottom. So if we come back over here, let me zoom out, okay? So that puts us basically from a breakout point. I don't know where we're gonna break out. Maybe we break out a little bit lower, somewhere over here. You know, that's putting us at around a $90,000 Bitcoin target, okay? Once we're done with this move and we close the CME futures gap. So again, the point that I'm trying to hit home is that this is not uncommon for Bitcoin to see. We said that there was a possibility to get a rejection, to come back down to this lower level, fill the CME futures gap, but ultimately, you know, as we're seeing, we're having these hash ribbon indicators. We're not falling down to the 89 of the EMA ribbon. And just to point it out, if you come down here and look at this market cipher indicator, which by the way, if you guys don't have market cipher yet, I don't know what you're waiting for. This is like literally probably the #1 best indicator that there is in crypto right now. You could, and if you know, obviously if you guys are interested, I do have a link below in the description for that if you guys want to learn to trade. But as you can see right here, you know, if we draw this line on this momentum wave, what are you guys seeing? You're seeing a bigger momentum wave move into a smaller momentum wave, right? And you're having this money flow, which is in the red, right? Coming up here, moving into the green, right? We're moving from red into the green. This is showing that money flow is moving to the positive side. So you have a larger wave, smaller trigger, even smaller trigger, even smaller trigger right here, okay? This is like a spring coiling up. This is like if you take a beach ball and you hold it under the water and you let it go, right? And that's what I think is gonna happen. You may have something like this, you may have a capitulation wick, and then what you're gonna do is you're gonna spring to the upside, and then you're probably gonna end up hitting around that $90,000 target that we had, you know, marked out before. But keep in mind, you know, 1, 2, 3, 4, 5, 6, 7 month, right? The 7th month we had the breakout, 1, 2, 3, 4, 5, 6. Okay, so August, you know, it could be a bit of a crapshoot. Who knows? We may go green. It may just pump right now. But, you know, if you're taking this as an example down here, we still could potentially have sideways for another month. And the other thing that I pointed out too is that, you know, summer tends to be boring, but, you know, eventually the kids are going to start going back to school. September, people start focusing again. And very often around Q3 is when you start to see that price reversal. So as you guys can see, we actually have more bullish structure than we do bearish structure. And even though we're having that lower high, lower low, which a lot of textbook, you know, people would tell you that that's an issue and you have to worry about that. Again, you know, of course, no pattern is ever 100%, but the higher probability, whether you have a broadening wedge in an ascending, you know, an upwards trend or a downwards trend, really, in both instances, you're looking for a higher target. In the downtrend, you'd only be looking to get back up to that previous high, but since we've been in an uptrend, that would put that target closer to that $90,000 range, right? But this is what I wanted to show you, and I wanted to talk about this clip that I'm about to play, and this is from the CEO of 21 Shares. Now, he was over speaking with Anthony Pompliano, and he, you know, obviously, you know, they're in the ETF space, they see the demand, they realize what's going on with these bigger players, and again, everyone's thinking that all the institutions are in. And as I told you guys, they're waiting for that data. They wanted to see the ETF launch. They wanted to see what was going to end up happening, you know, with how it performed over time. And as you'll see, almost nobody at this point is fully allocated.
It's absolutely the fire. The embers, the root, the foundations of the fire are absolutely retail investors. We've talked about this a lot. Retail investors are unique with crypto in that most new asset classes have been started and pushed by more institutional types who have reaped most of the rewards. And in crypto, it's the exact opposite. And that still holds true today. The retail is absolutely the base. The Bitcoin ETFs and the Ethereum ETFs in America, we've seen some pension funds and some teacher and firefighter unions allocate money to it. And it's so exciting. And we're speaking to more and more every day. And we hope to get more and more. But the base is still quite retail heavy. Now, on the institutional side, just to answer your question, more long-term focused, long holders of this asset typically take a while to get this past the committees and approved. We are still working through several processes with larger institutional investors for the Bitcoin ETF, which in America we listed in January. Now, another kind of institutional investor, the more active trading hedge funds and the discretionary funds and things like that, they're stock picking. Or maybe they're momentum trading, or maybe they're doing a number of other things. You sometimes see market makers or hedge funds do the basis trade, for example. And all of these kinds of financial engineering or momentum trading or stock picking, as you called it, that we are seeing a lot with the ETFs, which are highly liquid. They're securities. They're part and parcel of what they are familiar with and what they can trade in. But by and large, even though a lot of more traditional institutional pension funds, insurance companies, some have started dipping their toes in the water, no one is fully in yet.
So that's it for me, guys. Thank you so much for coming back to the channel. You guys rock. Like I said, super quick update today. Tomorrow and this weekend, I have a lot of stuff to do. If there's anything major, I'll drop an update. You know, make sure you guys follow me over on Twitter X. All the links are in the description. If you guys are looking to trade, don't forget that Blowfin bonus that is happening right now. Again, I'm not worried. I'm not freaking out. In fact, I'm taking advantage of this opportunity to continue to load up until that massive move, which I honestly don't believe we've had yet. So that's it again for me. If you guys do want to learn how to trade, check out these tutorials popping up right here, right now. I do want to drop some more tutorials for you guys, specifically on some newer exchanges. LevX is a great exchange if you guys haven't checked it out. Blowfin, obviously, I will be dropping that at some point. But guys, until then, I love you. You're awesome. Have a great day. Don't sweat it. Like I said, I think these dips are for buying. It could take 6 weeks, but until next time, guys, stay crypto. And of course, peace out.